Facebook, now we're winning, we're in business. So good morning everyone, let's do another live video. So question I got last week, really interesting one, was how do I avoid trading mistakes? So how do I actually go about avoiding making mistakes? Now this is really interesting because my initial answer, and this would be the same whoever I was talking to, is you can't avoid trading mistakes. If you're coming into trading hoping to avoid every single mistake that comes along, two things are going to happen. You're probably, number one, not going to trade, or secondly, if you are trading, what's probably going to happen is you are going to retreat. You're going to almost be what I call a trading recluse, is that you don't actually take the step forward. So you'll probably become frozen by fear. So the first and most important point to consider is that you cannot learn to trade and you cannot be a trader without making mistakes. And the challenge is a lot of people know this logically, but the problem is that they emotionally enter it without trying to make a mistake. And I've worked with some new traders that even opening a trading account, they go about it like they don't want to make a mistake. So this isn't about risk management per se, but understanding risk management. And I would say that the second most important thing is that if you're able to manage your trades correctly, mistakes that you will inevitably make will cost you less. So you can't be money scared. You've got to acknowledge emotionally that when you put a trade on, you're putting money out there into the market. So I think a better question to ask is, rather than how do you avoid trading mistakes, is how do you, number one, minimize the mistakes you make? Number two, how do you avoid making big mistakes that either cost you your trading account or mean you can't come back from? And then thirdly, how do you learn and recover from the mistakes or the losing trades that are inevitably going to happen? So essentially what you've got to do is you've got to minimize, you've got to avoid, and lastly, you've got to learn. So we'll start with the first one. How do you minimize the number of mistakes? Well, first thing you've got to do is you've got to have a process. So number one, you've got to have a process to what you do. Because if you got what I call a scattergun approach, 1 minute you're trading stocks, the next minute you're trading Forex, 1 minute you're trading against the trend, then you're trading with the trend, or you're even just using discretionary analysis, and there's no specific process to what you do on a daily and weekly basis, then you are far more likely to have mistakes. And if you don't have a process, there's nothing for you to be able to measure against. Now, even though I have a strategy, or I have multiple strategies that are essentially tick box, my discretionary analysis is still a process. We actually call it your discretionary analysis process. So one that allows me to get better at it, the more I do it, and I can evaluate it. And even though it's only a framework, I can still avoid big mistakes because I'm able to measure what I'm doing. The next is focus. So when you're trading, you've got to have the right focus. And this includes how you think and how you approach the markets from an internal point of view. But this can also mean your environment. I've worked with a couple of traders that are trying to do their analysis on a Sunday night, and they're trying to do it on the dining table with the kids running around and stuff going on and being asked questions. So it's much easier to make a mistake if you're trying to place a trade and you've got half your eye on your emails over here and you're not ruthlessly focused on what you're doing. So minimizing this process, focus, and lastly, I think a level of seriousness is that focus is directly proportional to the seriousness you give it. And some traders will come along, and when I'm working with them initially, they're only risking a very small amount of money relative to the amount of money they have in their account. And as a result, they don't give it the seriousness and they make mistakes, and they use excuses like, well, it's only a couple of quid, after trade lose, it's only 20 quid. But my view is you should treat that trade you're about to place that has a £20 risk on it in the same way as if you had a £2,000 risk on it. And it's the traders that act the same regardless of the amount of money that's at stake tend to minimize the number of mistakes that they make. And also learn from people, get feedback from people who are doing it, follow and watch their process, because sometimes the biggest mistakes traders are making, they don't even know they're doing it. So you can't necessarily minimize something that you're doing wrong if you don't know what it is you're doing wrong. Then, how do you avoid the big ones? So how do you avoid blowing up a trading account? How do you avoid risking too much on a particular trade? Well, get some learning. Understand the process first. So make sure you understand how you only risk 1% on your trading account. Make sure you know the strategy that you're trading, what are extreme winning runs, extreme losing runs. So this is something that's really important. And you can learn from books, you can learn from watching videos on YouTube, but always be careful about the context in which you are learning that. So for instance, I've read in numerous trading books where they talk about move your stop to break even, then your trade cannot lose. And in that one dimension, that's right, your trade cannot lose. But if you have too many break-even trades over and over again, those could have been trades that actually resulted in a 2-to-1 winner, a 3-to-1 winner, maybe even a 5-to-1 winner. So without knowing it, you could be trying to avoid making a mistake or avoid a loss, because the trouble is too many traders think by avoiding a loss, they've avoided a mistake. A mistake and a loss are two different things, and this is why feedback is so important. So for me, I don't care if the trader wins or loses. What I care about is have they followed their process and avoided making those mistakes. So yeah, learning from books, getting feedback, that's really important as well. But another one I think that is not talked about enough is how do you learn and how do you recover from inevitable mistakes that you're going to have. So let's separate those two now. So there's what I call genuine mistakes, where you've made a mistake on a trade, you've put your stop in the wrong place, you've got in and placed the wrong order. Things like that, you have to sort those out, and that's why process is so important. So if I know, or I'm coaching a trader and they know they've made a genuine mistake, if that mistake can be resolved, resolve it, log it, and then make a conscious effort to learn from it. But one of the ways you're going to be able to see where little mistakes show up and you can recover from those mistakes or avoid making them again is journal. So we are very big. We have a data analysis sheet that allows you to journal on it exactly what's going on with your trade, both pre, during and post. So a lot of traders find that they don't really know where their mistakes are, and very often they're in one of those three areas. So they might be making most of their mistakes during the trade. They might be making most of their mistakes pre-trade or post-trade. And what I get my students to do is cross-correlate when they do things they shouldn't. So not necessarily an unconscious mistake where they're putting a stop in the wrong place or doing something wrong without realizing, but when they know they're taking too much risk, or what I call a conscious mistake, like a rule-breaking scenario. So if they know that they start risking too much on a trade, or doubling on their risk, or breaking their rules when they're on a losing run, they can see a pattern to it. So they're able to learn from that. But if they're not journaling and correlating the results of their trade on one side and the mistakes or rule breaks that are happening on the other, they can't see where they're going wrong and therefore learn from them. So very important to journal, and very important to get feedback from somebody that could look at their data, look at their actions and find the connection between the two. Next one, I think a really important one, is beware of your language and beware of short-term thinking. So recency bias is something a lot of traders suffer from, where they're focusing on the current trade they're in, or a recent result that they have had, be it 2 or 3 winning trades on the trot or 2 or 3 losing trades on the trot. And it's in those moments where traders are often at their weakest. So if you find yourself making a similar mistake or having a similar rule break, it's very often because you're on the wrong side of things. So an example might be that a trader has 2 or 3 losing trades. They think short term, they stop trading that strategy, and then they notice that the strategy starts winning. So then they have 2 or 3 winning trades, and those 2 or 3 winning trades outstrip the losers by 2-fold, 2-to-1, or 3-fold, 3-to-1. So suddenly they jump back in and they start trading the strategy again. And then what they do is, because they've missed out on those winners, they double up on their risk. So what they find themselves doing is being on the wrong side of the strategy. They're in and out of the market because they're thinking too short term. And that's one of the biggest mistakes that I see, is traders chopping and changing what they're doing because they're not getting the immediate result that they want. So I think, in summary, key things is journal, get feedback from someone, but I think an overriding one that helps traders make less mistakes is be process orientated rather than results orientated. The traders who seem to make the most mistakes, either consciously through rule breaking or unconsciously without realizing what's going on, is very much the traders who are focused on whether the trade wins or loses, how much money they made, how much money they lost. Whereas if they really focused on their process and got feedback from somebody like me or another trader that understands how to coach somebody on that, then what they would find is their mistakes would reduce. All right, and remember what you're doing. This is something where you have to allow for risk. You have to allow for risk, and it is a high pressure situation, so mistakes will happen. Me, my team, students I coach, we still make mistakes, but if we've mitigated our risks, those mistakes have a minimum impact on what we do. So, hope that was useful. I'll be back again with you soon.